Hello everyone, and thanks for tuning into the Financial Investor channel. My name is Brent, and today we're going to be going over increasing my wife's Roth IRA contributions, for 2018. So if you are brand new to the channel, I do make stock market, personal finance, and real estate investment videos every single week. So consider subscribing, and let's go ahead and get into it. So in this video, we're going to be increasing my wife's Roth IRA contributions for 2018. Now, earlier this year in January 2018, she had started her portfolio. I created it over here on M1 Finance. I discussed the benefits of M1 Finance in a video, top right corner. I'll have that link. But quick summary, you get free trades. The account's completely free. There's no fees. You get partial shares. They're able to start a Roth IRA, which is a big one. I can't just go over to Merrill Edge, start a Roth IRA, and invest for free. You would get charged there. So I thought this would be the best platform up until she has a good base, and then she could transfer out, somewhere else in the future. But for now, this platform really works well for her. So we created her portfolio. She invests in her own Roth 401k at work as well, or Roth 401b, one of those. So this is just sort of another account where she's able to invest in single stock allocations and single stocks. So in the beginning of 2018, we put in $5,500 as a base, and we kind of watched the market. Now, we had a correction in February. The market fell by 10%. At that time, I was going through a transition myself. I was moving more from the stock market over into real estate. Now, I pulled my money out of my taxable account. I pulled money out of my Roth IRA, and I went ahead and funded my business for real estate. I created an LLC. I went through all the paperwork to get everything set up and get, a checking account, separated our business funds, decided what we were going to, came up with a business plan. What's our business plan? What exactly I'm going to be doing? And that was my main focus going from roughly March until June. I was getting everything set up in order to go out there, look for deals, and buy some real estate. So during this time in the market, early 2018, while the market was down, we were still I was kind of getting our funds together. I didn't want to have too much not available to invest in my business just in case, some situations came up. I was making offers were getting declined. So I wasn't contributing more than $10 per week into my wife's Roth IRA. Now we got everything sort of situated on the business end. The business is fully funded. It's in control of 2 properties now. It has a single family home. It has a duplex, and those are getting rehabbed. I also have enough money within the business funds that anything were to happen, I can keep those afloat for years. But now we're kind of moving back to my wife's Roth IRA, and we're going to be going and looking at contributing towards the remainder of 2018 to max out her contributions of $5,500. Now, we've had something really good happen here recently. Now, during the downtime here between February and July, the market or the account portfolio was actually down. It was down 8%, and then 6%, and then 4%, and then 2%, and then we were positive, and then the market just started to take off, and we had been positive for quite a while. We were up roughly 8%. Somewhere around there. You can see here, just within the last month, we lost 7.62% of our portfolio, and now we're down 4.44%. So this is actually great. We're buying at a discount. You can see that we have a number of stocks here that are actually down. Johnson & Johnson's down, Altria, Digital Realty, Lockheed Martin, JP Morgan, Kimberly-Clark, AbbVie, AT&T, Stanley Black & Decker, Avery, and Caterpillar. Those are all great companies there that are currently down in the portfolio, Caterpillar being down 30%. So I have changed a couple of allocations here within the portfolio recently, and what we're going to be doing is funding the portfolio now. So in order to do this, we just got to go over to funding, and here we can see that we already have our weekly deposits. Lately, I've been buying in, during this volatility, I've been putting money into the market. Last week, I put another $1,000 into the market because I've been wanting to completely max out her IRA contributions for 2018, her Roth IRA. So what we're going to be doing is we're going to go ahead and open up our 2 calculators here and finding out how much money we can contribute towards 2018, for the remainder here. So in order to do this, if you head over to funding, you're going to get shown your contributions. Now, we already know that we contributed $5,500 for 2017. So here we can go and take out 6, 7, minus $5,500 for 2017. So in 2018, we've contributed $2,529.67. So how much money can we, how much money can we invest into 2018 for the remainder? So we just take $5,500, subtract what we've already invested into the market, and this is how much we can contribute for the remainder of 2018 in order to max the portfolio to $5,500. So I'm going to go ahead and just say $2,970 and no change. This will put me within that range that I'm not going over for 2018, and then I can always just kind of spit the extra income that I need into there just to kind of max it out and not get in trouble there within I won't get in trouble by the IRA, or not the IRA, the IRS. So how many weeks do we have left in 2018? Well, if you Google it, how many weeks are left in 2018? There's 9 weeks left in 2018. So I go back over here to M1 Finance. I go ahead and pop up our money. We go ahead and say 2,970, and we divide it by how many weeks are left. There's 9 weeks left in 2018, so that is roughly $330 that we have to deposit every single week in order to max our contributions or meet our contributions for 2018. So now we have sort of our plan to kind of go into 2018. So down here, we already have our scheduled deposit of $10 every single week going in there on Monday. You can see here our contributions we've already made here. I'm going to go ahead and cancel this one. Yes, cancel. And then from here, we're going to go ahead and create a deposit. We're going to go ahead and select amount $330 towards 2018. If you were in between January and April, you could actually make contributions towards the previous year. So if you're looking at this video in 2019 and it's February, you should have two options here: 2019, 2018. So if you haven't yet invested in 2018 when you're watching this, you can drop it, select 2018, and make contributions for the past year up until April when you have to file your taxes. So here we're going to go ahead and select our transfer of Roth IRA, which is the one that we're scheduling here. And we're going to go ahead and set a schedule, repeat every single week on a Monday. I like buying on a Monday. Historically, it's the best day to invest because that's the red day. Here, if we look at stock futures are currently looking negative. NASDAQ was looking slightly positive there, but it did drop down into the negative. I think it's a great time to invest. Everything is showing red. The portfolio itself is red, and I want to just buy stuff at a discount there. You saw we had a number of red stocks there, great looking stocks that we're going to go ahead. So here we're just going to go ahead and select confirm, and our next transfer window is November 5th. So November 5th is actually next week. So this transfer is going to go in next week. So here what we're going to be doing is depositing another $333, and this is just going to be going in on the next trading window, which is this Monday. So we go ahead and hit confirm. So what we have here now is tomorrow we're going to have a one-time deposit of $330, and then November 5th we're going to have, which is next Monday, we're going to have another deposit of $330, and that's going to continue on until I stop it. But this is going to average into the market every single week that we're currently down. It's going to be able to buy. I'm going to go ahead and leave that as it is. I'm going to go ahead and buy all these stocks that are currently down. I'm going to be able, M1 Finance automatically targets these stocks that I'm down on based on the actual percentage to the target. So here, if I go ahead and switch it to my actual, Apple is down at 6.5 equity of my target of 7%. Now, if any of these other ones here, you can see this is down by 0.5, this is down by 0.5, this is down by 1.5. So Cisco will be targeted towards my investments here. Also, you can see AT&T, it's also down by 1.6. So AT&T will get purchased here. I just changed a lot of my targets here. AT&T, I bumped it back up. After that recent dip here in earnings, they fell down by a good amount. They went down at that $28, $30 point, which I believe is a great buying opportunity. I went ahead and put, it's going to automatically invest into a lot of these. I'm going to be able to pick up some more DLR as well and a few other stocks there. So that is what you have to do. If you want to go ahead and bump up your contributions for 2018, head over to funding, See how much you've actually contributed towards 2018, towards 2017. Find out what your number is that you need to contribute for the remainder of 2018. You have 9 weeks left in 2018, so you can either go weekly or you can go monthly. You have roughly 2 months and some change there, 2 months and a week in 2018. So come up with your plan. If you guys are looking to completely max out your Roth IRA for 2018, you will go ahead and set that up. Now, I'm not at all worried about whether the portfolio goes up or down because this is just equity. You know, I'm 33, my wife's, 27, 28? We always forget each other's birthdays. That's completely fine. We've been married nearly 10 years, so, but we have a long time until we retire at nearly 60. Our full, to take advantage of the Roth IRA, take advantage of our Roth accounts. We have, nearly 30 years each in order to hit retirement. So this volatility in the market, equity changes on a day-to-day basis. That's completely fine. But over the long run, this portfolio is going to be paying out dividends. Since 2018, with roughly $5,500 in there for the most part, she's made $150 so far just off dividends. We're going to be bumping this up, basically doubling it by the end of 2018. And instead of earning $150 by the end of 2019, she's going to roughly make $300 in dividends by the end of 2019. And then she's going to make $450 or $500 by end of 2020. Then she's going to make $600 by the end of 2021. And those earned dividends, that's just money that's getting paid out to you, that's getting reinvested into the market, into these stocks that are down, and bringing their shares up. Those partial shares that are getting purchased are paying you dividends as well. So not only do your capital gains compound, your dividends compound, everything compounds. So right now, it may not look like much, but we're getting a great bond opportunity right now that's allowing us to buy a lot of these stocks here that are currently down. If we look at some of these stocks, I went through the stocks earlier, but we're buying a lot of these stocks here at a high yield point from where they normally are. Johnson & Johnson's, for the most part here lately, the highest yield here is around 2.75. This is still a good buying opportunity for Johnson & Johnson at 2.5. Altria is at a 4.53. That's one of the highest points since back in 2014. DLR, not the highest yield, but definitely a good buying opportunity there. We just kind of came down 8%, so it's a good buying opportunity for me. Lockheed Martin, you can see 2.62. There was some high points back in 2013 timeframe. JP Morgan, 2.4. Kimberly-Clark, we have a 3.88% buying yield. That's a yield on cost, so that's a good buying opportunity there. AbbVie, that's over 4%. I bought this one back in 2017 at a 4% yield back in July of 2017. So here, and then AbbVie shot up at the beginning of January, sold that one off, and now I'm buying back into it at a 4.44 yield. AT&T has a yield of 6.88%. Stanley Black & Decker 2.31, which is one of the highest points since back in maybe early 2016 and 2014 period. Abbey Denson, that's a high yield as well. I don't think this is a good portion of my portfolio. I think I actually lowered that one down. And then we have Caterpillar. Between Caterpillar here, it's kind of interesting here that this yield, I'm going to go ahead and put in that price. Let's see what happened to that price here during that time frame. So between 2016, it really peaked, and Caterpillar's gone nowhere but down as of 2016. I don't think Caterpillar is a high percentage of my portfolio. I think I actually knocked that one down. No, it's 5%. I bumped it up a little bit. So it's down 30% of the portfolio. It's still a great company. I don't believe it may or may not be a dividend or risk account. We can find that out really quickly. I'm sorry if this video is a little bit too long. Let's go ahead and just check it out real quick. Okay, it's been growing dividends for 8 years. So I may end up changing that very quickly, but we'll see. Anyways, the main point of this video was that I wanted to increase the contributions going into 2018, max it out, and how I came up with that plan. So hopefully you guys did enjoy it. If you did, give it a thumbs up button below. Are you guys maxing your Roth IRA for 2018? Let me know in the comment section below. And that is it. Thank you guys for tuning in. I will see you next time. Have a great day. Bye.